probably joked about Bitcoin going up and then crashing back to 40,000 one day. And there we are today. Bitcoin is so volatile, it gets attacked for that attribute, but with the volatility comes the return. And I guess experienced investors know that there cannot be return without volatility. But I've seen it personally with the stock to flow model and with Bitcoin now 3 times up and 3 times down, that when Bitcoin is up very much, everybody wants to buy it. And stock to flow model and PlanB is the man, the myth, the legend. But when it's down, and where we are today, and we experienced that in March 2020 with the COVID, when COVID first hit us, but also in March 2019 when I published the article, we were really very much down. Then it's all Bitcoin is dead and it's a bear market. It will go to zero. It seems like a black or white thing, and investors and people in general seem to forget that it's just volatility and the overall trend. If you, for example, look at the 200-week moving average, the 4-year moving average, the overall trend is going up and never goes down. So yeah, I guess it's a question of perspective. If an asset is very volatile, then the chances of estimating or evaluating it very precisely are lower than if it's an asset that doesn't move very much, so like gold or actually any other asset. So to try to predict or evaluate Bitcoin it must be a very rough estimation. And you're right, the stock to flow model is very rough. So stock to flow is basically saying that if an asset is scarcer, it should be more valuable. And well, how do you quantify scarcity? There is a known measure. That's the stock to flow measure. It's the number of years it takes for a reserve in a certain asset to replenish that reserve. So for gold, there is 60 years of production above ground stock. And so the stock to flow ratio is 60. So the scarcer an asset, the higher the stock to flow ratio, the higher the value of that market should be.
Why do you think Bitcoin has been unable to sustain its momentum over the past 6 months?
There's a lot of stories about manipulation, about the futures ETF coming alive. There's a lot of speculation about central banks pushing the price down, much like in the gold market. But I think it's much simpler than that. We saw a China miners ban halfway last year, and that wiped out half of the hash rate, half of the security of the network. That was a major thing, major structural event, macro event, you might call it even for Bitcoiners. But that wiped out half of the hash rate, and all the miners had to move and relocate their stuff to the countries around China and to America, Texas mainly. So that was the number one reason to impact the price of Bitcoin. And currently, a lot of tech stocks are going down. The S&P goes down, and a lot of other assets go down because there is a risk of interest rate rise, and the Fed has spoken about tapering, about cutting back on the quantitative easing. That helped any asset increase in value if it was real estate or stocks or Bitcoin. So if they would stop, if the central banks would stop the quantitative easing, the money printing, that would certainly impact assets, as would rising interest rates, of course, influence the asset valuations negatively. They normally try to push asset prices down, the central banks, by just mentioning rate hikes. And I don't know if they're really prepared to go all the way and crash the stock market, for example. In my experience, they won't run that risk. But it will be a very interesting couple of months, and that's, I guess, the main topic right now. And a lot of tech stocks are being hammered as we speak.
Why do you think the IMF is so hot at El Salvador, right? You know, it's gone beyond just saying, yeah, we don't think this is a great idea. and they're making now threats toward El Salvador about, their debt and borrowings from the IMF. Why do you think it's so vitriolic? Is there some concern, do you think, from global elite economic actors and supranational organizations that Bitcoin could disrupt sort of their monopoly on global money supply?
Yeah, I think there's legitimate fear for more countries doing the same as El Salvador did. And that, of course, diminishes the power that the IMF has and that the central banks, especially the US central bank, has over countries like that. So I would be very afraid. I don't think they can stop it unless with force. And we've seen many examples in the past that, of course, the diplomatic and financial aid is the first step, and then force is the second step. So I think it's very, very interesting to see what happens and what the IMF does next, because it urged El Salvador to cut the legal tender standard for Bitcoin, but El Salvador said no. So what's the IMF's next move? They must be very afraid, because El Salvador is a very small country. It doesn't have an impact on the world economy. So why are they so aggressively and so fiercely fighting El Salvador? It's an interesting question. I don't have the answer, but sure to watch it very closely.